Cathie, I do want to talk a little bit more about the flows because it's interesting. It's not just your funds. If you look at some of the best performing ETFs year to date, they're crypto-linked ETFs. They track equities that are related to crypto companies, and yet they're not seeing the flows come in despite the performance. And when you think about that and you think about your lineup, what do you think is going to take for you to really see the flows come back? Is that going to be a rate cut, or what do you envision?
Actually, in July, we're seeing the flows come back. The studies out there through June. So flows are coming back. And I think one of the reasons is we established, ARKK, our flagship strategy, established a base over the last year. And it has been trading up and down through that base. And the base topped out at 45. Well, we broke through that, and I think a lot of investors and maybe more who are technically oriented are looking now at a breakout in our strategy. So we'll see if it continues. We've enjoyed positive inflows in July, which have cut in half the outflows. I think our outflows are just something like 200 or 200 plus million, which on a $9 billion plus fund is quite a small outflow year to date now.
And to your point, I'm looking at ARKK inflows over the past week. We're looking at nearly a $250 million. So we'll continue to track that. I do want to get your thoughts on crypto, though, specifically when it comes to Coinbase, because it was interesting. If we look at ARKK, you actually sold a little bit of your Coinbase stake for the first time in nearly a year. I'm curious what your current thinking is on Coinbase, especially given its year-to-date rally of nearly 200%.
Yes, well, we're very positive on Coinbase, especially in light of the court ruling for Ripple and against the SEC. Not all together, there were some puts and takes, but by and large, very positive for exchanges. And so we're very optimistic. The stock has had a significant move. Remember, in March and I think in June, we were looking at Wells notice and an SEC suit, which really hammered the stock, but did not take it to new lows. And you saw we bought at those levels. And so as the stock has escalated to the top of, it's the second largest after Tesla now in the flagship strategy, and it's the largest in ARKF, our fintech strategy. We're simply taking profits and reallocating the capital to perhaps some laggards.
When we talk, well, where exactly does that money get reallocated to, Cathie? Where? Well,
let's see. We have been buying some of, I can't talk about all of these trades, but we have been buying some because they're still in process. We have been buying some of the genomics names that have not caught fire and have been held hostage by the depression in the healthcare sector generally. Right. So that's what you'll see us do is, again, we probably already own these stocks. We have reinitiated Teradyne. Teradyne is still in a base, and so we did use some of the Coinbase for Teradyne, which is a play both on the semiconductor cycle around AI and automation. It bought Universal Robots, a Danish company, several years ago, and we think that that space is about to boom.
Did you find anything at all attractive about NVIDIA? I know there's been some discussion as to why we didn't see those positions in RK elsewhere here. What was the reason for, I guess, not pursuing that?
Well, we actually bought NVIDIA for because we knew it was going to be a player in autonomous vehicles, autonomous taxi platforms. We bought it in 2014 when the fund began at $5 and rode it up to $350 and then saw it take off with AI and leave many other companies that we think are going to be huge beneficiaries of AI, leave them behind. So we basically reallocated into other AI plays that are not as obvious. NVIDIA is very obvious now. Everybody knows it. It's priced accordingly, 25 times revenues. We're cycling. Tesla's the biggest AI play opportunity out there, and it's roughly seven times revenue.
I am curious on one thing, though, Cathie, because I think when people think of you, and if this is a mischaracterization, correct me, but they sort of think of you as that big thinker. You know, you're sort of investing in these kind of moonshots here, these big structural shifts in our economy, in our society here. Does valuation, meaning the current multiples, does that matter that much if that is the end goal?
So great question. Thank you, Romain, for asking it. So our valuations are based on a 5-year investment time horizon. So we must believe, or we do believe, to be conservative, that we should not assume that current multiples or valuations will extend into the 5-year period. We actually assume they will decay and go more towards market-like multiples. So that's a headwind we face. We must believe that the combination of revenue growth and margin expansion is going to more than overcome that valuation headwind and deliver a compound annual rate of return of 15% over the next 5 years. And you'll see with NVIDIA last year when we sold it, and then again in January when we sold it, it had dropped below that 15%.